Hi everybody, this is Dennis Wilborn, founder of Active Trend Trading. Thank you for taking the time to watch this free video that we do every week. It is a video where we cover the markets. We also have oftentimes have some trades that we might be setting up that you might want to take. But I want to ask you, before you leave the page, as you watch the video, just give us a real quick thumbs up and share the content with somebody else. Leave us a comment. We'd really appreciate that. So aloha, God bless, and mahalo. Good afternoon, everybody. This is Dennis Wilborn. I want to thank you all for joining us for today's session of Making Money Trading Stocks, Options, and ETFs. We'll get going and jump into the presentation here shortly. I want to welcome everybody who's joining us via Facebook. And if you like the content, we're going to be talking about what the market's doing today. If you like the content, please basically give us a thumbs up. And also, feel free to share the content of this video with anyone you choose. We just like adding new people to the Active Trend Trading member base. And hey, you may learn some about the market and take advantage of the experience that is in front of you right now. So without any further ado, let's get on with the presentation. Okay, again, this is Dennis Wilborn with the Active Trend Traders. Welcome to Making Money Trading Stocks, Options, and ETFs. For Friday, this is January 25th, 2019. This is the fourth Friday of the new year. We've got kind of one more week to go before closing out the first month of the year. Been a very interesting day. And next week, I'm looking for something to be potentially very maybe a watershed moment for the market, setting it up for what it's going to do the rest of the year, or at least the next quarter or so. All materials presented are for training purposes, and only traders should always paper trade any new method prior to the risk of their own personal capital. Past performance is no indication of or promise of future performance. It's a picture of me and my son. This is Brandon Wilborn. He basically is working with me. He worked with me when he got out of college. Did several years, a great technical analyst. He basically did all the legwork on our new service called Market Action Points. And so really, which is going to be launched out next week. And I'm really happy and pleased that it's always nice to work with a family member. So I'm glad Brandon's on board. Part of the thing with traders is we tend to often get fidgety. And we want something to happen. We want to make something happen. We want to make some money. We want to do this. We want to do that. But we have to remember that our job as a trader is to wait for the best possible opportunity. Money is made stalking and sitting, not being active and forcing or trying to force a new trade each day. Because you got to remember that other than when we enter and when we exit, we have no real control over what the market's doing. So this quote from Dan Zenger is very applicable. Our objective for today's session is to, one, provide timely, actionable intel at the end of each week, seeking to clarify and simplify what the market's doing so that you can make decisions that will help multiply your wealth. Basically, my overall view of the market as we move into the weekend is that, one, the indexes have moved up into a resistance zone. Multiple layers of resistance is where it is at. We have several items happening next week that could be market movers, either one way, either strengthen the uptrend or taken away from it. What are those particular deals? Well, one, the Fed meets next Wednesday. Then secondly, Fed means next Wednesday. Any hint that a hawkish mood about interest rates comes out from that meeting, the market could react in a negative manner. Any hint that, we're going to stop raising rates for the next year, and the market could react in a very positive manner. We'll see what transpires from there. Any type of a move on the Chinese trade talks, that's been out of the news a little bit here lately with the government shutdown. And apparently they had a little bit of movement on that today with the the non-essential government workers, starting back the government back up. So the non-essential, I've heard some really funny quote, the non-essential government workers are going back to start their non-essential jobs. Having worked in the federal government for 23 years, I can kind of understand what that statement is about. The other thing that we'll have to look at for next week, or this week, is basically everybody's just in a mood to kick the can down the road. Wait till the Fed. And secondly, also, what else is going on next week? Well, many big companies are having earnings. Apple, Facebook, Amazon, all has earnings next week, 29th, 30th, and 31st. Add to that some of the other stocks that we watch, things like Tesla having earnings next week. Tesla got a downgrade today by one analyst who basically said he looks for Tesla's value or price to be down at $88. We're sitting on top of a nice little leaps straddle that we use for our strategy, our premium strategy number 3. And if it drops $88, which is about $300 from where it's at right now, that leap straddle is going to be worth a nice bit. So we will no doubt make our 100% on that particular trade. So I'll take a look at some stocks, ATTS performance, bonus for today's setups, and no bonus for today's setups simply because going into the Fed, I like to stay light on my exposure to the market because you never know what's going to take place with the markets. And who's that good-looking guy? Oh, that's me. That's my little where my new trading room is, and we've moved on out into that now that we've got the house rehab. Here's where we're sitting as of about 9 o'clock this morning. We're sitting about break even for the active trend trading system, which is absolutely normal this for the first month of the year. And then, one thing that's interesting, hey, Russell's up almost 10% for the year. That's also a very interesting phenomenon. Let's move the photo here. Let's go over. Let's look at some charts. Make sure I'm getting the right one. Yeah, here we go. So I was doing a little bit of last Saturday. I went to an 8-hour class on Fibonacci's. Fibonacci's for both to develop symmetry between time and price action. Really interesting. And for premium active trend trader members, we're going to be basically going to some study on fibs. They are phenomenal at showing where things may in fact turn around. And so, what do we got going on in these charts right here? Well, a couple of things. First, that line right there. See that line? That line is the 100-day moving average. As you can see, price action through this week, basically we dropped down, and it looked like this was going to be, hell bent for going down here and hitting about the 250 level on the SPYs. It came almost exactly to the 8-day moving average, stop and bounce, stop, and next day stop, bounce, 8-day moving average, next day stop, bounce, 8-day moving average, bounces up. So what's happening is we're in this little zone here between the 50, the 8, the 20, the 34, and the 100-day moving average is acting as resistance on top of that, plus some other price action that happened over here. As we see, you've got this going on here. Excuse me. You got a little bit of this going on over here, where this is going up to these past highs over here, and it's just running into resistance. That's all. Now, is it going to push through this? We don't know. One of the things that I always like about this kind of features, if we do break up a little higher, could go 270 or higher, what's going to happen with the TSI? Right now, a TSI may give us a little bit of a negative divergence on a daily chart. What does that mean to us? Well, basically, that could be the first clue that the market's starting to approach a level of potential weakness. But the thing that is not slowing down is down here with our market forecast. And if you want to know about these indicators and how how great they are, we provide training for our premium members on how those all work. On the weekly chart, those are all in gear TSI, in gear to the upside, market forecast, the longer term green line in tune to the upside, again running into a resistance area right below this downtrending line. So price action could bounce all the way up to about, let's say 269 to 270, and then roll over and reverse. How does that look? What does that look like in if we threw on just a real simple fib on this and just retrace this last high to low? Let's go here. Let's grab that high and grab that low. And as you can see, that 270.84 corresponds to the 786 retracement. And so we'll see if we get up that high. And again, that corresponds to just about where the downtrending line goes, is heading. And so we'll see if we can get up past that. So next week's going to be very important. The first part of next week will, of course, be waiting for the Fed. And so I'm going to just, like I said, stay out of the Fed until it is time to, until it's after the Fed meets. I'll stay out of the market until then. The Qs. Representing the NASDAQ, again, similar type situation. We're up here against a resistance level at the 100-day moving average. You can lay on the same type of Fibonacci on here and say, oh, look at that. You know, here's how much higher it has. If we do one thing here, guys. Yeah, okay, there we go. And so if we grab this past high here, and this is just one of the relationship on these fibs down to this low here. Look at that. We've, here is the 786 retracement. So it's just hanging out below that. Has not given any indication that it wants to flip over and die yet. IWM, same. IWM, back up to resistance of the old high. You do the same type of similar situation here, see what kind of projection it has for where it may go. The one thing that is very interesting, I think, on the IWM is you have this potential for what I call that's what I like about using the TSI, is what I would call a head and shoulder type pattern on the TSI. Let me show you what that looks like. It did not give me my... There we go. So this goes up, pull back, up to make a high, pull back, up to make a new shoulder. So shoulder, head, shoulder. And if this even if this continues to push a little bit higher and our TSI over here doesn't keep up, that's a good sign of negative divergence. And the other thing that's happening really quickly is the market forecast is pushing on up to new highs. Anything above the 80 level is considered the upper reversal zone. So if we get all three of those momentum indicators up here simultaneously and making a cluster in that upper reversal zone, oftentimes that's indicative that a reversal will be taking place within 1 to 4 trading periods. Or since it's at a high, that tends to work better in on the bullish reversal zone, which is down here, and to move up. So, but it also in the upper reversal zone, oftentimes it can be indicative of when something is just going to stall out and or potentially reverse back to the downside. A couple of stocks I'll just cover for us really quickly. Again, we've got the Fed meeting. You've got Apple, Facebook, Amazon, basically doing earnings next week, along with Tesla. And then Netflix already had earnings. And so keep an eye on it because we get this little bit of a sell-off after earnings. Where did it go to? It was a nice sell-off, but it only dropped down here to 320 level. Is that going to be, so one or two things going to happen with Netflix? And look for this, because on a move up like this, then you get a pullback. That's the first pullback. Now, normal bullish type scenario, this will be a pullback to support and then a bust up higher and to go out and take up these other old highs over here. On a weekly chart, as you can see, on Netflix, we had a shooting star in last week's price action. That is basically a bearish reversal signal. However, TSI weekly chart, market forecast weekly chart has not reversed yet. Same on the TSI looks like it wants to reverse on a daily chart. However, look what's going on here on a weekly chart or a daily chart. The longer term momentum on Netflix is still down. That's a little bit of a negative. Look down here, volume on these last couple of buy days, up days with Netflix, low. So a low volume pull back up towards the highs might set us up for a pattern that looks like this. It's basically it drives up, pulls back, drives back up. Look for any type of an extension that gets back into this level. If it fails and you get weakness, then we could look at a drop down, take out the 320, then we're heading for lower pastures. And again, that's not necessarily saying that that's what's going to happen, but as we can see from the charts, that's something that could happen. I'll leave you with one final chart, just as a. I know most of you do not trade futures, but I want to go here to the gold futures. Gold futures were pretty amazing today. Gold's been kind of just hanging out here. Let me get rid of some of this. These remove. That's another thing that I studied over the weekend. Is we don't want to duplicate that. We want to remove it. Do you know that there's symmetry in time also? And so when you combine the symmetry in time with the symmetry in price action, sometimes you can get some very interesting convergences of time and that show when price actions are going to potentially turn around. That chart. And on a daily chart, look how this kind of basically pulled right back into it had, slow down here for a second. Gold had kind of gone into a little bit of an uptrend, starting back here on in November. Normally, gold will get a little bit of a pullback into the first part of the year and then take off into January, February. And sure enough, that's exactly what's happening. This was an excellent move down here to the downside. But now the market forecast, or the TSI, has now ticked up. And so I'll be looking to trade something in gold going into next week. And one of the couple of things you can trade, you can go and trade GLD. And so in GLD, any kind of a little pullback, as you can see, GLD broke out above these highs. Not as neat of a pattern, and so that's one of the reasons, because the gold futures trade 24/7. Sometimes it causes gaps when you go to the actual ETF, but this gap up, we want to go to an intraday chart to look for a pullback in that, because this is now a trigger to the upside. So we have an alert setup. Now we'll look for a trigger to get into a trade on this. GLD is one way to trade. Another way to trade, you can go in here and trade either Nugget, which is a 3-time leverage ETF of the gold miners, or you can trade JNUG. JNUG is an excellent opportunity also. As you can see, it did a nice little breakup today. So you can just pull up a intraday chart, look for a intraday trigger on a 15, 30, or 1 hour chart. And I would anticipate on a move up like this, a pullback, kind of into the middle. So I could basically I'll show you how to do this. I'll just show you how to do this. Is I take my fib, go down here to the bottom, pull up my fib from the bottom to the top. And so what that's saying is I'm anticipating some kind of a pullback back into what I call the magic fib box. And so that would be somewhere between the 30% and the 60% retracement, which is about right there. And of course, that's not going to let me do that. Let me see how. There we go. So any kind of a pullback into that green area would give us an opportunity for, we look for a reversal out of that. So pullback and a reversal in there, and on something like JNUG. And basically, if you get a pullback into there and it goes on up and hits the past highs, what would you be looking at for a return? Well, that's about a 10% move. It goes on to higher highs, which it could in fact do. Let's expand this a little bit. It goes back on up to these highs up here about 12. That would give us again, I'll just go right to the middle there. It's over at 12. About kind of returns you don't want to really talk about, somewhere around 40 to 50% if it gets up to that area. On this pattern here, from this high, this low to this high, or breaks back out through that, you're looking at a run of about 60%. So JNUG has the potential of doing, a 20, 30, 40, 50% move over a very short period of time. That's one of the reasons why it is on our premium watch list for our premium members, and we track this for it on a weekly basis. So anyway, those are the things I'm working on. The guys who tuned in for the live show at during market hours, this particular input was not available at that time. So let's roll out and finish up today's session. So I always take a look at seasonality. Normally, January, February, March, the indexes tend to move a little bit sideways, not a lot of movement. Then they catch a bid going into the April time frame and then push on up through the rest of the year. Very interesting. Last year, the indexes did not really follow that type of a format. Crude oil is another one of those. Crude tends to get a pullback into the January time frame. We're now close to the end of January. Crude has, in fact, kind of done a pullback, and so we would anticipate some kind of reversal in February to basically put a bid on crude to run up through about the May timeframe sideways, then up through the end through the October timeframe. Crude oil came closest to matching its seasonality, seasonal personality last year. Gold did not match its seasonal personality last year, and we'll see if it comes back to match what it basically has done over the last 20 years this year. And what this is the chart of gold is not going to absolutely follow this tick for tick, but it gives you line of demarcations where you can anticipate, okay, yeah, it should move down a little bit 1st of March or go sideways. And then if we're playing things to the long side, then we can look at, okay, the TS tends to get a bid around the June, July timeframe. So I know I want to be into gold at that time frame. Also, first part of the year, get a nice bid up through February with gold. Hey, monthly meetings on February 2nd. We will have a BAM webinar meeting, and we're going to be talking this time about the clear and simple trading rules. Prepare for record profits in 2019. Premium members are every Wednesday evening. We do our technical training. We've been going through the active trend trading rules, making sure everybody understands and showing how to trade them, what the mechanics of trading the rules are. Well, that's a very successful system. And so other things, we are launching maps next week. That is market action points. Very pleased with how that is, showed it's doing over the testing period. And so that's going to launch out. Keep an eyeball out for that, because we're going to be coming out making an offer at an exceptionally low price point for people who want to be charter members in MAPS. And that's a yearly or a semi-annual membership. And for people who just want to join active trend trading, here's the perfect time. Here's one of the entities that is key on our watch list. And we only follow a few. We follow our Magnificent 7 ETFs, which includes biotechs. Here's the bullish ETF of a biotech, and it's a 3-time leverage. And you can see over I think that was last year. In fact, it had 3 moves that were 35% or better. When you combine that into a compounding effect, you get a really nice compounding effect over here, a little bit over 200%. Now, I'm not saying we're grabbing this whole move here, but we're just looking to capture once the trend changes, jump on the trend, ride it as close as we can to the top, or after it reverses down, then jump out. That's the idea behind trend trading. It is not day trading. We don't go in and out of the market on a daily basis. We want to capture these trends, ride it for several days, weeks, and or months. And that's what active trend trading is all about. So if you want to become an active trend trader, I have a special going on right now that ends on the 31st. And it's our New Year's special. And once you become a member at whatever level you become a member at, the price of your membership never goes up. And some of the people who joined us like 7 years ago, when we were doing our initial introductory offer, some of the members that are still members from then are still paying that same amount that they paid 7 years ago. So we don't move price. We don't have a moving price point. Once you're in, you're in. As long as you stay, maintain your membership. And so what do we got going on right now? Regular membership is $124.99 per month. You save 40%, $74.99 a month that you can cancel at any time. Or if you want to save more, you can do a quarterly membership for $199 per quarter. That's a really good deal. And that way, you don't have to worry about, you don't have to forget, worry about remembering. It's just once a quarter. That's a big saver there. You go to that website, activetrendtrading.com, premium membership special. There's the password, save, all caps. So that's it for today, guys. This is Dennis. I'm going to be signing off. Remember, 2019 is a year of completion and perfection in our trading. I'm really looking forward to how members are going to be trading, wisely and more profitably. So we're going to work on keeping the egg growing. And for premium members, we jumped into the final hour and had a really great session today with the final hour. And so until next time, remember, aloha, trade well, and prosper. God bless everybody. Aloha.